Welcome. I'm Lourdes Gurchin from Keller Williams Legendary in Long Island, New York. And today we will be going over 10 critical mistakes that could halt your home loan approval when purchasing a home. Purchasing a home is a significant milestone, often representing a culmination of hard work and financial planning. However, securing a home loan is a crucial step in this process, and avoiding common mistakes can be the difference between approval and denial. In this presentation, we will explore 10 critical mistakes that potential home buyers should avoid, maximizing their chances of securing a home loan. Let's go over these common mistakes. Mistake number one: changing jobs or becoming self employed after submitting your home loan application. Lenders prefer borrowers with stable, consistent income streams to ensure they can meet their mortgage payments. If you change employment, this could raise concerns about your ability to repay the loan. Lenders will verify employment and income as part of your loan application process. If you recently changed employment, there could be a delay in verifying your income or providing sufficient documentation, which could slow down the process of the approval. If you're still in a probationary period at your new employment or business, lenders may be hesitant to approve your loan until you have demonstrated stable income over a longer period of time. For self employment, lenders may require additional documentation as evidence of income and stability for a sufficient length of time. You should always communicate openly with your lender about any changes in employment status. Mistake number two: making major purchases. Large purchases, such as buying a car, truck, or van, often involve taking additional debt. This can increase your debt to income ratio, also known as DTI ratio. A higher DTI ratio can signal to lenders that you may have difficulty managing additional mortgage payments, potentially leading to a loan denial or a higher interest rate. Financing a major purchase typically requires a credit check and may result in temporary dip in your credit score. A lower credit score can negatively affect your credit and eligibility for mortgage or result in less favorable loan terms such as higher interest. And depleting your funds for a down payment and closing costs affect it, as lenders require borrowers to have sufficient funds for these expenses to demonstrate financial responsibility and ability to cover upfront costs associated with home ownership. So focus on maintaining stable finances, preserving credit score, and saving for your down payment and closing costs. Mistake number three: excessive credit card use or neglecting current accounts. Excessive credit card use and neglecting current accounts can be harmful to securing a home loan. A high utilization can result in a low credit score, therefore more challenging to qualify for a mortgage or in result less favorable loan terms. Neglecting current accounts can negatively impact your payment history, indicating to lenders that you may be a higher credit risk. So, to improve your chances on securing a home loan, it is important to you to manage your credit responsibly and keep it in good standing. Mistake number four: spending closing funds. Closing costs typically include fees such as appraisal fees, loan origination fees, title insurance, and prepaid expenses like property taxes and homeowners insurance. If you spend the funds, you may not have enough money to cover these expenses at closing time. Debt to income ratio, or the DTI, is affected as spending the closing funds could reduce the amount of money available for your down payment, potentially increasing your DTI ratio. Your DTI ratio compares your monthly debt to your gross monthly income and is an important factor lenders consider when evaluating your loan application. You may need to delay the home buying process while you save additional money to cover these expenses. This could delay your ability to secure the mortgage, causing inconvenience to you and the seller. Refrain from spending the funds you have set aside for closing costs until after the loan has been approved and you have closed on the home. Mistake number 5, omitting debts and liabilities from loan applications. Omitting debts and liabilities from your loan application is not only unethical, but also illegal and can have serious consequences. Providing false or misleading information on a loan application is considered mortgage fraud, which is illegal and can have severe legal and financial consequences. It is important to provide accurate and complete information to lenders to facilitate a transparent and fair evaluation of your loan application and ensure a successful home ownership process. Mistake number 6, buying furniture before closing on the house. Purchasing furniture before closing can deplete the funds you have set aside for the down payment, closing costs, or cash reserves required by the lender. This could leave you with insufficient funds to meet the lender requirements. Financing furniture purchases or using credit cards to buy can increase your debt to income ratio. And applying for financing or credit cards to purchase the furniture may result in additional credit inquiries, which can temporarily lower your credit score. So, large purchases may trigger additional documentation requests from your lender to verify the source of funds or access your overall financial situation. So, focus on preserving your financial stability, maintaining a low debt to income ratio, and avoid unnecessary credit inquiries to improve your chances on securing a mortgage with favorable terms. Mistake number 7, initiating new credit inquiries. A lower credit score due to the inquiries when initiating new credit may affect your eligibility for mortgage or result in less favorable loan terms, such as a higher interest rate. Lenders use your credit score as an indicator of your credit worthiness and risk level when evaluating your application. A higher debt to income ratio may raise concerns for lenders about your ability to manage additional mortgage payments. Initiating credit inquiries may trigger additional documentation requests from your lender to verify the source of funds or access your overall financial situation. So refrain from applying for new credit or taking on additional debt during the home buying process. Mistake number 8, making large deposits without consulting the loan officer. Lenders typically require borrowers to provide documentation for any large deposits into their bank accounts to verify the source of funds. Transparency and communication with your loan officer are key to a smooth loan approval process and successful home purchase. It is important to consult with your loan officer before making any large deposits into your bank accounts. They can advise on the documentation required. Mistake number 9, changing bank accounts. Changing bank accounts can complicate the verification of your assets. Lenders may need to verify the origin of funds transferred to the new account to ensure they are not from undisclosed debts or liabilities. Lenders may require additional time to obtain these statements from the new account and verify the funds, which can delay the approval. If you need to change bank accounts for legitimate reasons, such as better terms or services, it is necessary to communicate openly with your lender and provide documentation to support the change and verify the source of funds in the new account. It is always advisable to maintain a stable banking relationships and avoid making significant changes to your accounts during the loan approval process. Mistake number 10, co-signing for others. To minimize potential complications with your home loan approval, it is essential to carefully consider the implications of co-signing for others and understand the potential impact on your financial situation and credit worthiness. It is advisable to consult with your lender and carefully evaluate the potential risk. This brings us to the end of this presentation: 10 critical mistakes that could halt your home loan approval. I hope you found this information useful. If I could be of any service or guidance, please do not hesitate to reach out to me. Thank you for your time.